Hi, welcome to the screencast on Chapter 3, Section 3, the flow of resources, goods and services, and money in a market economy. Economists use diagrams and models all the time to explain different situations. We're going to call this figure 3.3, and this is the circular flow model. And basically what it represents is the circular flow of resources, goods and services, and money, and how they flow through a market economy. The reasons markets work so well is that one person's output always becomes another person's input. Goods are produced and consumed. Money comes in and money goes out. This flow keeps the economy running. Economists use the circular flow model, like that in figure 3.3, to illustrate these interactions. In the simplified market economy shown in the model, there are two kinds of participants: households and firms. A household is made up of a person or a group of people living together, consumers or producers, and the model assumes that households own the four factors of production. A firm is an organization or a business that uses these factors to make and sell goods or services. The model also shows two kinds of markets. One is the product market, which is represented on the bottom half of the circular flow model. And in this market, goods and services are sold by firms and purchased by households. Your local mall or supermarket is part of the product market. The other market is the factor market, which is represented in the top half of the circular flow model. In the factor market, households sell their land, labor, capital, or entrepreneurship to the firm for wages, rent, interest, or dividends, basically money. Let me explain. A household might rent or sell their land to a firm in exchange for rent. Or members of a household might sell their labor to a firm for wages. They might loan capital to a firm in exchange for interest payments, or they might buy into a firm's stock in the hopes of receiving dividend payments. The funds paid to the households by the firms are called factor payments, but basically it's money. Follow the arrows of the diagram to see the circularity. Money going into the households in exchange for land, labor, capital, entrepreneurship. Households then get to spend that money in the product market in return for private goods and services. Households buy products from the firms with the money that they receive in the factor market. Firms acquire land, labor, and capital from the households using money that they receive in the product market. Let's think of a real-life example. You, as part of a household, might buy a pair of jeans from a firm with the money that you earned by working in the local ice cream parlor. The ice cream parlor, in turn, pays you for your labor with the money that it receives from selling the ice cream to other households. All these transactions are conducted by people and businesses who want something for themselves. People work so that they can buy things. Firms employ people so that they can make things to sell. In a market economy, everybody chooses what is best for himself or herself. As Adam Smith wisely observed, it is not from the benevolence of the butcher, the brewer, or the baker that we expect our dinner, but from their regard to their own interest.